So let's talk about the psychology of holding Bitcoin. You've probably heard the term HODL. And yeah, it really did start with a typo in a forum post where some guy just meant to write hold, but it stuck. And for good reason, because this whole game, it isn't really about fancy trading charts. It's a mental battle. Today, we're going to break down why just holding on is, believe it or not, the hardest and maybe the most important part of this whole journey.
Okay, let's just get right to it with a question that I think hits pretty close to home for a lot of us. Why on earth does this painful pattern happen over and over again? You see the price going parabolic, everybody's talking about it, so you jump in. And then the panic starts and you sell at a loss. It is a gut-wrenching cycle. And you know what? Understanding the why behind that is the very first step to breaking free from it.
And that really brings us to this idea right here, which I think just perfectly captures it. The real test isn't about whether your wallet can handle the price swings. It's about whether you can't. It's about your own emotions, your patience, and your conviction. It's basically a test of character, just cleverly disguised as a financial asset.
So I want you to think about this whole thing as a psychology test. It feels like it was almost perfectly designed to push every single one of our emotional buttons, to go against our natural human instincts. We're going to look at the key parts of that test, and we're going to start, not with human feelings, but with the cold, hard logic of the machine itself. First up, the halving. This is the mechanical heart of Bitcoin. It's the engine that literally programs scarcity into the code. And the thing is, this isn't based on what the market feels like on a Tuesday. It's pure, unchangeable, predictable code.
So what is it? Well, the halving is a pre-programmed event. It happens about every 4 years, and when it does, it cuts the number of new Bitcoins being created exactly in half. Now, the most important part of that sentence is pre-programmed. This is a supply shock that everyone knows is coming, right down to the day. It's probably the most predictable supply shock in all of economic history.
And you can literally see its rhythm, its pulse, right here on this timeline. 2012, 2016, 2020, 2024, it just keeps happening, like clockwork. This consistency is the bedrock of the entire system, and it doesn't care one bit about the chaotic news of the day. It just keeps on ticking.
And this slide boils it down to the simplest terms. See the bar on the left? That's the new supply of Bitcoin hitting the market before a halving. Then, boom, the event happens. The bar on the right shows you what happens next. That new supply is instantly chopped by 50%. I mean, basic economics tells you what happens when less of something is being made, but demand stays the same or even goes up, right?
To really make this click, think about it like this. Imagine if there was a law of physics, a law of nature, that guaranteed the amount of gold we could mine from the earth would be cut in half every 4 years, on a predictable schedule forever. I mean, can you imagine what that would do? Well, that's exactly what happens with Bitcoin's code in the digital world.
Okay, so we've got this beautiful, predictable scarcity machine. But here's the thing. The machine is only one half of the puzzle. To actually see the benefit of it, you need a very, very specific mindset. And that brings us to the psychology of the HODler.
It all really comes down to these two different ways of thinking. On the left, you've got high time preference. This is kind of our default human setting, right? We want that immediate gratification. We react to every little price movement on the 15-minute chart. But on the right, that's the hodler's mindset, low time preference. This is all about focusing on the long-term value, understanding that real growth takes years, not minutes. It's about zooming out and looking at the 10-year chart instead.
And all of this leads to a classic quote that could not be more true in this space. The market is just a machine. And what does it do? It transfers wealth from the impatient, those with high time preference, to the patient, those with low time preference. That's not a bug, it's a feature.
So if being patient is the strategy, what's the actual skill you need to develop? Well, it's the ability to separate what really matters, the signal, from all of the loud, distracting, and frankly terrifying stuff that we call the noise.
And oh man, is there a lot of noise. You've got the scary headlines, the exchange bankruptcies, what some billionaire said on Twitter, and these stomach-churning 20% price drops. Our brains are hardwired to freak out about this stuff. For thousands of years, our survival depended on reacting instantly to threats. That instinct doesn't know the difference between a tiger in the bushes and a scary red candle on a chart. It just screams, danger!
But here's the thing. Behind all that noise, the signal is just humming along, completely unchanged. The Bitcoin code is still running, new blocks are still being mined every 10 minutes, just like they were yesterday, the network is still secure, and most importantly, that programmed scarcity, that halving schedule we talked about,
totally unaffected. The signal is the math. The noise is just human emotion.
And you know, this whole principle of programmed scarcity is really becoming a blueprint for other things. The core idea you see here, with other assets designed to mature right alongside Bitcoin cycles, shows that this psychology of holding isn't just a Bitcoin thing. It applies to anything that is verifiably scarce in the digital world. It's a powerful model, and it all tests the exact same thing: human patience.
All right, so let's bring this all home. HODLing isn't just some funny meme or a trading tactic. It's really a whole philosophy for how to win the long game, simply by understanding the psychology that's at play.
And here's the absolute key to it all. Bitcoin rewards conviction. See, if you're only focused on the how, that is, the day-to-day price, you're always going to be scared. But once you understand the why, the whole reason this thing exists, like providing financial sovereignty, then suddenly the daily price swings start to lose their power over you.
Which brings us to one last, kind of provocative question. We're always told the goal is to beat the market, right? To time it perfectly. But what if that's just the wrong game to be playing? What if the winning move is not to play at all?
And that's the final takeaway. Stop trying to beat the market's day-to-day craziness. It's a game that is literally designed to prey on your worst instincts. Instead, aim higher. Beat the system by adopting a long-term view. Opt out of the game of impatience. Be a hodler.